And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time. I'm your host, Coach Tim Justice, here from Tackle Trading, and welcome out to our YouTube channel here on a Friday. We call them Friday Fun Days for a reason. It's because we got Coach Frank here to break down charts with us, bringing some of his very, very special picks from across the markets that he has scanned for as well. Let's bring all the coaches in, kind of do some introductions, talk a little bit about what we're going to be doing on the show. But you first, Frankie, how you doing today, sir?
Doing well. Excited to be here. I always, at the end of this big earnings week, I always kind of think the earnings is done. And then I scan and realize that no, it is not in fact done. But other than really tired of earnings season, which is just par for the course, right? I'm used to that. Doing well. Excited to be here with the team as always.
You know, it was the first thing that you corrected me on this morning, and I appreciate you doing that. I was like, man, we're getting through the week of earnings. You know, a lot of busy names. It looks like it's going to be a little bit lighter next week. And Frank is like, no, we are not out of it yet. We've got through the rash of many of the biggest names in the marketplaces, obviously, but not all of them. Amazon, Apple, Microsoft, they did report this week. We're going to even be reviewing Exxon and Chevron, who reported today, as well as Caterpillar. So a lot of big names through the week, maybe the busiest week, Frank, but it doesn't mean that we're not, at least very, very busy moving forward for a couple weeks, right?
Exactly. So we've made it through we're past the point of no return, right? We can see the other side, and next week maybe we'll actually be able to really see the other side.
Yeah, absolutely.
It always feels that way when you get done with this specific week in earnings.
It does.
When you have 170 S&P companies led by Apple, Microsoft, Amazon, Facebook, and just a plethora of mid-cap darlings out there, right? Mm-hmm. There's just a lot. It feels like the entire market. Next week, you still have 138 companies reporting earnings. It's just led by Eli Lilly, Amgen, Moderna, CVS, GM, Duke Energy, Conoco, Activision. You have it's just much smaller companies, so you still have the same number of companies reporting next week. It's just a different basket of companies, so it just feels a little bit like we're getting to the back half.
Yeah, that's right. Not quite the marquee names as the big five in the market, but still going to be very busy. By the way, we had one of those big five report yesterday after the bell. We'll be talking about that a little bit later. But Matt, we can't go past pleasantries. How you doing today, sir?
Tim, I'm doing absolutely fantastic. And Mark, you know what? I am doing better than Pinterest today. I am.
not his team.
I'm doing better than Pinterest. In fact, I'm slightly better than Pinterest today. I am nowhere near doing as good as team today.
There you go.
They're a good team. Are you just fired up about Atlassian's price response?
Yeah. Go team! Go team!
That was go team moment. I love it. Marky, how you doing today, sir?
Yep.
Dude, I'm always doing better than Pinterest.
You should not get joy out of hating on that company.
I don't hate on the company. I just don't buy the theme is all.
They had a disappointing quarter, obviously, from that price response. We'll talk about some of the numbers a little bit later and what to do with it. That is a gap into no man's land down there, Frankie. Ugly.
Not pretty.
By the way, if you're out there watching the show, welcome out to our program here on a Friday. As you come on in, give me a thumbs up, get the analytics up on the channel. We really, really do appreciate that, even from our regular everyday members. That's very, very helpful. We're growing this channel, guys. We're almost to 19,000 subscribers. We're eyeing that 20,000 mark as one of our goals here at Tackle Trading in the next several months. So if you are new to our channel, you've not done it yet, we do this kind of content every day the markets go live. Make sure you click that subscribe button and click the bell and come back and join us. And, let's just start with market analysis here, Matt. We every weekend, we actually put out some pretty incredible reports, in my opinion. I love what the value we bring to our community through our newsletter, our option, our stock report. So we're going to be ranking these sectors. We're going to be talking about this market. If you think about the totality, it was a very busy week on the S&P 500, but we didn't get a lot of traction from price action, really, holding a beautiful uptrend right near the all-time highs into a high base here that might set up for a nice breakout next week. How are you reading this, Matt?
Pretty much that.
Yeah.
Yeah,
Yeah.
I mean, pretty much that. There really isn't much to say or break down from a technical perspective outside, when you're coming into the Friday, you kind of look at the week that was. And the week that was, obviously, we had a tremendous amount of major names out there reporting earnings. And you had a little bit of an up and a little bit of a down. But for the most part, when you're looking at this week, guys, there it is. There's not a lot there from a technical perspective outside the specific ranges of the high base that you're now looking at. And so you're looking at a support level of 43.70. That's been updated this week from the 43.80 intraday support level because you violated it multiple different times. You're updating your resistance breakout channels. 4,400 was one we were looking at during the upward movement in price phase of this trend. Now you're looking at consolidation with the top level of 44.22. And so it's just, this week has been if you're going into this week and you knew what was reporting on the backs of that type of trend, you got through this week and I think you're satisfied.
Yeah.
But outside of that, there's nothing really to update from a technical perspective. It's a high base.
What about you,
That
Frankie?
resembles the rut daily chart, right? Up, down, sideways. I love intraday charts. They can present stories. So
Sure.
Yeah, little up, little down. There's not real been any trend develop from an intraday perspective this week. I felt like the market needed to take a punch this week. It did.
Mhm.
Let's move on.
Yeah. Frankie, what about you? How are you reading broad price
Yeah.
action?
I mean,
here?
I think Matt and you both summed it up very nicely. You kind of like that you're roughly speaking seeing that support zone still right around that old resistance level. Good defense with the names that reporting and some of the responses to those names. I think you really are satisfied from a bullish point of view. Still looking for the break at this point in time for that next signal as far as confirmation signal goes.
Yeah.
But I think you're pretty happy. I think you guys are spot on. It was a nice week to be sideways, right, with all of those earnings names.
Well, and honestly, quite frankly, Tim and I were sitting down reading the Amazon earnings report last night, and the initial response to Amazon's report, based on just when the numbers came out, it was before the conference call, and you see this initial response, it is just getting butchered from a numbers perspective. And what was interesting with Amazon, we'll go through the numbers here in a second, was they actually beat on their actual raw numbers, on their EPS numbers they beat, but it didn't take but 1 second before the sell to start happening.
Mm-hmm.
And that was all algorithms. That was all algorithms. There was pre-planned selling here on Amazon's earnings report, in my opinion.
100%.
Like, this one's not even difficult to call.
Yeah.
Numbers came out. It was a positive number. But when you see this type of price response, that just tells me institutions were planning on selling, is what it was. It didn't even matter what the raw numbers were. They were planning on selling. That response was so, and again, we're looking at a 5-minute chart. I'll break this down on the shortest time frame here, guys. That selling was literally the first second it came out.
Yep. We were waiting for it. We were
a
watching
conscious thought could not have occurred before the selling happened.
there's no chance, right?
Zero chance.
And you look at the snapback, 3 rallies in the next 10 minutes,
It's all
of
algorithms.
which immediately rejected, which once again is automated algorithmic selling.
Yeah, which that does give me a little bit of context for the selling on Amazon. But what the concern was we know how much Amazon represents to the market. We know how much Amazon represents to the industrial movement. We know how much Amazon's one of those big dog stocks out there. And yet, what happened in the S&P? Not much.
Mm-hmm.
Stabilized. I think that's, and again, it could have got a little ugly today with Amazon's report, but the broad market maintained its support. I think that's a positive development going forward.
Mm-hmm. Mark, when you look at the entirety of the week, obviously we got through the Fed meeting. We've been churning just kind of in a nice little consolidation phase up here. How are you reading through this? Is this a healthy week for you that just sets up next week's action, potential trades and all that?
It's been a tale of two markets in the month of July, right? And there's been different rotational themes go on, different action. I'm happy July is ending. It's not been a bad month for me in things, but it's not been a great month in a lot of stocks that just unhealthy charts and a lot of weird technical setups. You know, when I look at the price action of Amazon, it reminds me of the Microsoft. We had a similar market response a couple quarters ago, where just that immediate didn't mean the end of tech, right? But it meant that you had a lot of choppiness in tech moving forward. Who knows if history repeats itself in that? But it does make me start to look towards other areas of the markets. That, you know, who's going to pick up the slack? We've seen metals and minings have a great 2-week stretch. Are there going to be elements of that? From a thematic standpoint, I'm still scratching my head on what the bullish theme is, what the thing is. I'm very happy with the end results in July in the face of what Frank likes to call summer chop, right? I mean, the price action from a pure technician like Frank, he's like, yeah, heck, you know, this could have got a lot worse. You know, I've seen
Right.
July just go up and down, right? You know, like it's all over the place. So not a bad July for a choppy month from a big picture. I think there have been some, you know, that, you know, when I look back in the month of July, reminds me again, there might not be a bullish theme I can identify, but there's a lot of, what's the word you used the other day, Tim? It wasn't resolute. What was it? It was, you know, market can take a punch still, you know, was basically your thought still. And we've seen that in the month of July again. You know, so there is some conviction in this market, even if, you know, it's producing its normal time summer chop.
Yeah. Let's flash through all of the indexes here, Matt, and tell me if you see anything from a relative strength or weakness perspective. I'm looking at the Russell 2000, who had a nice, healthy development through the week. The Dow still got a nice breakout potential, up above 35,000. The NASDAQ, obviously, very similar to the S&P. From a technical eye, what are you seeing from a relative strength?
Don't need to do it. You just did. You said everything that needed to be said on the indexes this week.
That makes me happy. Frank. All right.
Well, for Tim.
Well, there hasn't been really any development on the indexes this week. And so you're looking at the S&P as a high base. You're looking at the NASDAQ as a flag. You're looking at the Russell 2000 and wide range neutrality. And you're still looking at the Dow as a potential breakout of 35K. Nothing has changed this week. So what you just said is the only thing that needs to be said on the indexes. Now, there will be things said in the sector from a sector conversation perspective. And that's what Mark is talking about. Whereas you're seeing a little bit of slowing momentum in the tech space, you're seeing a little bit of slowing momentum in comms, and I'm talking from a trend perspective. Patterns still look very healthy in both spaces. You have seen this week a little bit of pickup in those, you know, cyclical areas of the market, such as basic materials breaking back up above the resistance channel at 83.30. You're fighting up against a 50-day moving average. The two short-term momentum moving averages, the 9 and the 20, have crossed over, showing bullish momentum in the materials space. You're looking at energy here, showing a little bit of a bearish retracement on the backs of two earnings out of Exxon and Chevron here today. Finance still clinging on that right shoulder breakout. Industrial still clinging on that right shoulder breakout. And then your defensive areas of the market have stabilized a little bit towards the top end of the chart here on staples. Real estate still very, very consistent, very strong, although a little slowing momentum, but the pattern hasn't changed hardly at all. Healthcare, one of the best, most consistent performers over the course of the last couple months, continuing to do so here this week as well. So I do think the story that is quite frankly, I think the story that's been being told over the course of the last 18 months is from a sector perspective and not necessarily from an index perspective. The indexes are major theme driven. Sectors is where the story is actually told.
Well, and there was one major theme that made a few baby steps this week, but we're not quite there yet. It's that infrastructure deal. But these other sector rotation conversations, one of the biggest stories for me all week long has been that materials chart and that sector that's picked up, like you just highlighted one of those.
Do you think, because there's been a lot of news on the infrastructure this week, but I personally don't feel it's had any impact on market analysis.
I don't think so yet.
All.
No.
Because do you think a lot of the market is kind of like me, where the assumption of the $1.2 trillion infrastructure deal is just, it's been done for 6 months, and this is just a political haggling process?
I think so. I think most people are seeing it the way that you and I are. That basically they're working through the process. They're taking baby steps. They're ironing these details out, and eventually we're going to get a deal done. I think that's the way that the market is kind of expecting it. So
I kind of feel like a deal's already been done. It's already been done for months.
just about getting it through the red tape kind of thing.
Yeah.
Yeah. And, I don't think it's impacting price action too much. The only one day this week, maybe, Thursday had a nice little bump in some of those sectors, but.
I know, but there's been 3 moments this week where you had infrastructure conversation and the market's just not paying attention at all.
Not doing much with it.
Yeah.
Those sector conversations are going to be a fun one in our scouting report meeting here in a little bit. And I do believe materials and, is going to get a little bit of an upgrade there. The other strength is still the strength, but industrials
materials will, but again, materials will get an upgrade most likely. You did break up above too many things not to get an upgrade.
Right.
I don't love the technical formations that are happening, though. It's an inconsistent price movement that gives me a little bit of pause.
I like the potential for a trade in industrials better than materials, but you got to respect the performance in materials. And my take on this. What about you, Frank? Anything you want to add to the sectors real quick?
No, we're seeing a lot of maintenance, right? I do agree that you're going to be upgrading. I think you have to upgrade the material sector, but I agree with Matt. I think we're maybe 1 week away from really good setups, at least across the board within that space.
Well, Frankie, correct me if I'm wrong, but kind of my take on it is I like the space. It's starting to cook, but you're overextended coming into the 50-day moving average in the short term. It hasn't been a beautiful intraday ride up into that 50-day moving average. Probably needs a week of stabilization before you start getting more clearer charts.
That's kind of where my head is. And we do have quite a few of the chemical companies report next week too. So maybe it can be like the S&P this week where it goes sideways, lets things chop a little bit, and then gives us that signal the next week. I think that's probably ideal. If it just keeps V'ing up like this, that makes it a tough trading environment for anything that you're getting into new. For anything they already have, you're pretty happy with that V, right? So it depends on how you're looking at it.
I don't know. I'm never a fan of V-shape analysis. I like stable charts, consistent charts, patterns I can get projections on. V-shaped charts, they make holders happy. They don't make traders happy.
Exactly.
All right, let's flash through the commodities next if we can here. I do want to get Coach Frank's read from a technical perspective on a couple of these. Bitcoin, crude oil, gold had developments this week that are interesting, Frank. Some of those were stuck in the mud a little bit, but crude oil broke out of that little consolidation around that 70, 71, 72 mark, is now pushing higher towards resistance. What's your read here on crude?
Yeah, your window is tight on crude, right? I think that resistance zone is looming large on top of us. If you were playing crude directionally, whether it was that little breakout that happened, earlier this week, whether you were buying the dip, after that crazy volatility, I think you're probably there. It's really tough unless you're trying to trade that window from a day trading point of view, which I'm sure there's plenty of room there for the day traders. We just are going to have to deal with that 75 to 77 range. And when we're hanging around 74, that's awfully tight. You got to like the momentum moving into it. But that's a big level. We've talked about it a lot. I'm sure, everybody's noticed that many times with or without us. Until we get some clarity there, it's really hard to want to play it this close to it. I personally believe.
Yeah, I agree. If you were looking for some kind of day trade or maybe a micro swing trade or something like that, you better have been into that already, in my personal opinion. What about you, Matt? Anything you want to add to what Frank has to say about crude?
Yeah, you're well, from a swing trade perspective, there's no swing trade given the fact that you now are in wide range neutrality. The only analysis I think you guys nailed it was the potential day trade above 72.5, playing it to 75. But you're 74 at this point. You're too tight against that target.
You've missed that, yeah. Gold next, if we can, and obviously gold fired off support there yesterday, Frank, but went right into some resistance and moving.
A little premature, guys.
Yeah, it just got a little premature. Yeah, it just got a little, and it just happened fast, right? The move itself was decent from support to resistance was a good move. It just so happened to happen in one day, right? So it hanging out here makes sense, taking some profits, cleaning up for a potential breakout, though. That's not a bad development from a technical point of view, I would say. We wanted to work into resistance, right? We wanted to pause at resistance to let profit takers come in. Now let's see if we can actually get a break of that 1840 to 1850 range. It has all of this stuff, right? All of those moving averages and the resistance from days gone by. So it's interesting to me. I like that we've broke resistance, we've made higher highs, we made higher lows. The break of resistance would be follow through on that. You could sign me up for that potentially from a directional point of view, but it's got to break, right? And I do think it's healthy that we took a little bit of pause here today after firing so furiously into that resistance zone.
Yeah, I think so. Let it set up a little bit, and when you see it and when you get it down, that's when you do something about it. Until then, you're below those levels. Maddie, anything you want to add to gold?
While you and Frankie were talking, I was thinking, I do think it's premature. I think we got to let the analysis kind of work itself out between 1800 and 1840. And I do think with the firing off action yesterday, it sets up some interesting analysis coming into that 1840 for next week. But I kind of feel like we're in one of those major, and I don't know if this is going to work, so I'm just going to do it live. But I kind of feel like we're in one of those major movies, right? Like Gladiator or Braveheart from back in the day. And we're like, the horde is charging, right? And we're just sitting back saying, hold, hold, hold. And then we unleash. Give it a little bit of time. Give it a little bit of time on this one. I do think over the next week, as we stabilize towards the top end of the chart here, as we see the market kind of navigate these moving averages towards the top, this double top, triple top, quadruple top, if you want to look over there, I do think it will stabilize and set up a fairly clean trigger that you're probably looking right above 1836 to 1840 at this point.
Mm-hmm.
So I do think that the price action this week does set up something potentially for next week, maybe the week after, as gold navigates this top end of the chart. But I do think the analysis that Tyler brought on Wednesday about breaking out of that flag does change the personality of the pattern. It does shift the volatility a little bit. You are now looking at potential breakouts, whereas to start the week you're just like, I don't care. Mm-hmm. So I do think it wakes up the gold traders to the potential of the breakout.
Yeah, I think you've got to be woken up to that at this point. There's no question about it. And if you've been a cash flow cover call trader and all that kind of stuff, watch for that potential breakout. You might even open that up a little bit when you get it, because you've got a directional move setting up there. All right.
I'm watching Gladiator later today.
Dude, you got me thinking about it. Because I was thinking,
it's the first scene. You know the scene. All the arrows and that first scene, right?
Good scene. Good movie.
You also made me think about Braveheart and the scene, obviously the iconic scene where they're holding those stakes on the ground and then they bring them up at the very last second. But then also Lord of the Rings, that one scene in the very third movie where they are rushing the keep, or maybe it's the second movie. I have to go back and watch it. Now I'm going to have to have a conversation. The keep. Yeah.
Oh, dude, that's the second one. Tim, your movie knowledge continues to amaze me.
Oh, okay. All right. Anyway, I'm thinking about which one is best. Which one is best? Yeah. Well, which one do you like best, Marky?
Two Towers.
As far as what are my choices? Braveheart, Gladiator, Lord of the Rings 2?
No, those scenes, those iconic scenes where the battalion
sorry,
and the horde is
they're all
rushing
awesome.
in.
They're all amazing. Like, they're amazing scenes. There's a reason Matt brings them up as an analogy, because they're awesome. They create real emotion, right? Excitement, power, all that.
Out of all of those movies, my favorite scene is actually when in Lord of the Rings 3, Return of the King, where the horse, what do they call it? I forget what the name is. So I apologize to you guys who love Lord of the Rings, but it's when the thousands and thousands and thousands of cavalry line up and they rush the horde. Oh man, I get all fired up. I'm like, get me on a horse right now. Get me a sword. Let's go.
Yeah. I'm gonna have to see some of these movies this weekend as well. Now you guys got it on my brain. I think it was gonna go with one. I'll go back and watch Gladiator. I haven't seen that movie in a long time. Beautiful. All right. Let's move on. Give me Bitcoin next, then the dollar, and then I do want to talk a little bit about some of the economic data that came in. Bitcoin, obviously, Frank, it's been a very interesting week. Go ahead.
Frankie, why is Bitcoin and gold trading like they're friends again?
Sometimes it's easy to get along.
Yeah.
Sometimes it's not. But they're back on speaking terms as of right now.
They both fired off this week. They're both in reversal patterns, and they're both cleaning it against resistance.
Yeah, and it was impressive. It's been impressive on Bitcoin. It makes sense, right? Where it stalled, like that old pivot, that resistance level.
Mm-hmm.
I mean, if you're a Bitcoin person, whether it's looking to add or just been holding and wanting to see some positivity, you definitely got that first step here this week, and I think you're happy with it. I mean, we need to take out this resistance for any next signal, right? Until we get that. I do like the way that it's developed and held up at resistance, though. Right? There was a lot of. It would have been really easy to want to take profits at resistance. I wasn't in Bitcoin, but if I were, and I've been watching that floor the last couple of weeks, if I woke up a few days ago running into that resistance level, it would have been really tempting to want to take some profits. Well, sure, there was some small profit taking, nothing dramatic. I think you like the breakout potential if that's your thing. I mean, there's still going to be a lot of work to do. I mean, it's one of those, we say it a lot, whenever you're coming off of bottoms, there's lots of work to do, right? You win one fight, there's another one not too far away. But hey, you got to win the first one to get to the second one, right? And so at least we're starting that process, or at least trying to start that process.
Mm-hmm. Yeah.
Well, and I Frankie, I don't think a lot of traders have been participating in Bitcoin.
I would agree with that.
During the failed breakout of 60K. Once you did that, it changed the dynamic, and I think the short-term traders were just gone. Like how many times do we see a failed breakout on some chart not named Bitcoin that we just move on?
Move on till it develops like this.
We're going to move on. We're going to move on to something else that's working better. We're going to let you kind of transpire, do whatever you want. We're going to come back when we need to come back. And so, yeah, I don't think today or this week is traders locking in profit, because I don't think traders have been actively participating nearly as much. This is more just holders here, more than anything. Mm-hmm. The traders are now waking up to the potential because of the price action this week. And so I think a lot of traders now are looking at this type of price movement, and you're seeing double bottom here. You're seeing a double top. You're seeing consolidation towards the right side of the chart at the top end of the reversal pattern. And so I do think the traders are now waking up to the opportunity here. But during this downward movement phase, I think most traders, and I do think for most coaches that tackle trading as well, they're not looking at this stuff here. They'll go move on to something that's working. Now it's waking up. Now you're starting to get some analysis on short-term analysis on Bitcoin. And again, I do think gold and Bitcoin are waking up simultaneously a little bit, and that does pique my curiosity.
Yeah. Yeah, it's definitely, both of them have very similar price action characteristics this week. So it's a good note.
Well, how many times in the last 18 months have I had to do the whole thing of, hey, Bitcoin, we're on the same team?
Yeah,
right.
Yeah.
Because they weren't trading together. It was like almost Bitcoin versus gold to some extent, especially during the pandemic analysis. It's interesting that they start trading together off reversal patterns together. Yeah. Again, and maybe I'm just seeing something, but I'm curious over it.
No, Frank, are you seeing the same thing, Frank? I mean, reversal characteristics into a potential breakout. Now they've got clear lines in the sand. I'm with that.
Oh yeah, absolutely. I think the technical evidence is there. The why you could debate, right? The if it matters you could debate, but I think the technicals tell the story.
Technicians will always say it doesn't matter. Like that's what technicians will say. Theme-based.
They find nice ways to say it, though, man.
Yes, they do. They do, and that's just an eternal battle between the fundamentalists and the technicians out there, right?
Yep.
So, yeah.
That's right. All right, let's move right through the dollar. You can take a peek at it if you want. The only thing I was going to bring up is we had economic data this morning that was coming in mixed. Consumer sentiment was better than expected. PC and price inflation a little bit lower than expected. Some mixed data points in there. But I did see Fed President, St. Louis President Bullard did mention that they're going to stop their tape. He wants to stop tapering in 2022. But I'm like, all right, okay. Let's
wait till 2022. Bullard will say, I want to stop tapering in 2025. That's how Bullard works.
That's how Bullard is. All right, let's talk Amazon.
Bullard's one of the most dovish people on the Fed.
Yeah, he's been that way for a long time too.
So, you don't trust anything he says on projection analysis.
No. All right, earnings roundup. We got a couple of big ones that I do want to talk about. Obviously, we mentioned Amazon earlier. I also had a question from the chat about that Amazon sell-off once we get to it. But Matt, numbers first. What did we learn from Amazon here?
Well, first and foremost, third consecutive quarter for Amazon passing that $100 billion mark. They did come in at $113 billion in total revenue, certainly helped by Amazon Prime Day there in June. But the expectation, and this is where the concern was with Amazon, is the expectation was 115 billion. And unlike some of the big dogs out there where we just saw beats, Amazon came in at a miss on revenue, and that is a little concerning. But EPS numbers came in very strong, very healthy, 15.12 versus the expectation of 12.30. Once again, the revenue was a slight miss. Companies like Amazon for the quarter have done fairly decently. But when you're talking about Amazon, the context is important here on the breakout potential. That obviously got blasted here this week with the recent earnings report and the gap down analysis. So when you're looking at Amazon, right now, it's a little bit concerning from a charting perspective. That breakout is completely destroyed now, and quite frankly, you're back into the range where you were dealing with Amazon between 3,000 and 3,500. You got to go back down to some degree of neutrality that you have now felt this breakout at 3,500. But again, the concern here on Amazon was not necessarily EPS; it was revenue, and then it was also growth forecast for the remaining for the foreseeable future, next 1 to 2 quarters. They were concerned about growth, very similar to what Facebook talked about as well a day before, concerning about growth. They don't provide guidance to the same degree others do, but they did have some concerning about growth. So a miss on revenue, concerning about growth coming into the future. Got a little bit of a gap down here now. For me, again, what I said earlier in the show, I do think is important when you're looking at the initial price response here. A lot of this was just algorithm driven. That's all it was algorithm driven, pre-planned sales. Ever since you've had the conference call, you've seen stabilization here out of Amazon. A lot of this is pre-planned based on the actual numbers that came out, conference call. A lot of stabilization. That stabilization is happening as Amazon comes down near that 200-day moving average. But when you look at it on the weekly chart, you see that weekly, again, the 50 weekly and the 200 SMA are very similar. You see that 50 weekly there. A little bit of buy the dip analysis on Amazon happening today. It's going to be very important for Amazon to hold this 50 weekly range. But once again, I do think regardless of what your analysis is on the earnings, the price response is king here. And the king says we're back into neutrality on Amazon.
Yeah. And here's the thing. There's several things about this report that stood out to me. Number one, obviously, like you just highlighted, Matt, the revenue, potential being lower in the third quarter and them saying some concerning things about moving forward with revenue. Sure. I get why Amazon took it on the chin here by 5% today. I mean, they got to beat. You got to beat and beat. And if you're this up near the all-time highs, I get that. But there were some good things too. 200 million Prime subscribers, in the quarter for the first time ever. I saw that. Their AWS revenue continues to shine, and that's a segment of their business that is still incredible. We're not changing the character of Amazon. So Frankie, as we have a failed breakout here on the long-term chart, do you have interest in this dip, or does the failed breakout kind of trump that analysis? I'm curious what your technical read on that condition is, because that's kind of what I'm watching and I'm thinking through.
It's realistically going to be a while before I'm interested. I don't know what exactly it's going to take. And that might be just a couple of weeks, and that might be a couple quarters, right? But it failing that breakout point, now that's like all that good work has been erased, right? Now all of that stuff that's developed is now potential issues to deal with. So from a trader's point of view, this goes to, we'll see you down the road. Something really good will line up again. I'm almost willing to guarantee it. I just don't know when. I don't expect it to be in the shorter term. It's just the reset button, basically. So new things are going to have to develop.
It's a difficult analysis because outside of the initial 1 to 2 minutes in the marketplace following their release on their numbers, you haven't really saw selling.
Yeah, it's been impressive. It's been
you haven't seen anything recovery outside of the initial algorithm response. Mm-hmm. And so it's this tells me institutions were planning on dumping on the release on the earnings numbers. It's stabilized after that. I don't think the investors are gonna concern themselves very much.
Right. I think that's fair.
But Frankie is talking purely as a short-term trader, and he's not wrong. Mm-hmm. This one's going to take some time before it shores up any degree of short-term trading perspective.
And on that note, I do have a question from the chat from one of our longtime members, Team Tackle members, Jeremy Johnson says, why would algos plan to pre-sell on Amazon like you talked about? That's an interesting question, Matt. Why
they have millions and millions and millions in shares, and earnings is one of the most popular days where you have massive volume when you want to dump.
Mhm.
And so a lot of times institutions will simply wait for earnings to either buy or sell. A lot of times when you see, numbers that are not very good, but the stock's going up and up and up, it's because somebody's already made a decision to invest in that company, and they're just using earnings as a way to get in or get out.
Mhm.
And so, yeah, sometimes you do see that. It's not. I don't want to say it's happens a lot, but when on Amazon, when you see the very first second, and I was literally watching the tick chart, guys, when Amazon reported, and in 1 second, you were down 5%.
Mhm.
Like you were down 5%. That's algorithms. That's algorithms on pre-planning, because the actual number came in as a very good beat. The algorithms don't look at the revenue numbers, guys. They look at EPS numbers.
That's right.
So I don't know.
Yeah.
Why would an institution do that? I don't know. I'd have to interview them.
Yeah.
Like I don't know. Like you don't know why an institution says what they say. Maybe they have too much risk. Maybe they made too much money. Maybe they're simply reallocating into some other area of the marketplace that all traders do.
Mhm.
I don't know. We cannot answer that because we don't know the psychological nature of the individual who made that decision. But what we do know is the selling happened immediately upon the release of the report. We do know following the initial downward movement in price, Amazon started stabilizing.
Yeah. And then from there is gap analysis and then new technical analysis. Then you got to let patterns develop and the whole thing. So you approach it the same way that you would after any earnings gap there, Jeremy, for sure. Good question though.
And final thought on it. It gapped down into an annoying part in the chart, right? If you're a little closer to support in the coming weeks, I would look for a support thing, but you're ways away from that. If it gapped down to the old breakout level, I'd be look for support. It gapped down to a horrible spot in the chart,
Well, and Mark, if you start talking about, if it gapped down into these historical levels down around 3,000, you might be interested. And I would tell you, no, you wouldn't be.
Yeah.
Are you kidding me? If you gap down underneath all these moving averages that have been support for Amazon's price, you're not going to have the same read as you think you might. That you'd be concerned about, because you'd be thinking if it breaks 3,000, there's nothing until 2,000.
Yeah, these charts can be very annoying, and they happen a lot. Like sideways movement after big moves up, and it's a messy chart.
Yep. All right. Let's move on. Next on earnings, Matt. What do we got to take a look at? I know Exxon. Chevron,
we're gonna rapid fire, and we're just gonna go down the order of what I wrote down here. We're going Pinterest, U.S. Steel. Pinterest, I'm going to go rapid fire here. They had a miss on EPS. They did beat on revenue. Pinterest comes out at 10 cents versus the expectation of 13. Revenue came in at 613 versus 561. That did result in a 125% increase in year-over-year revenue. I didn't look into the detail of Pin's report. I don't know if any one of you guys did. I'm sure there was some subscriber growth concerns here.
The biggest thing I saw, and I didn't read the whole thing, but was subscriber and user activity, monthly user activity.
Because the raw numbers weren't
They
bad.
actually went down in the quarter in number of users, and then declined to provide guidance for the future on users.
Oh, that's okay.
That's a double whammy right there. I've dived into this while we've been talking. Number of users went down. Like they have less users than they did a quarter ago, and they refuse to provide guidance on those numbers moving forward.
Not good, Pinterest.
No,
not good.
No,
not good at all. Tim, what do we say about growth companies?
You got to grow Pinterest.
What you can't do is contract.
No.
Like that can't happen. Pinterest, okay, that does add context. Raw numbers were fine. Subscriber growth obviously concerned. Pinterest is a stay away at this point. Let's move on to U.S. Steel. Not U.S. Steel, but still has been cooking here over the last week. We've seen Cleveland Cliffs. You brought that up the other day. Seen Steel Dynamics do some good things. U.S. Steel comes out, reports earnings of $3.37 versus the expectation of $3.16. U.S. Steel comes in with a beat on the EPS numbers as well as revenue numbers. Gotta like U.S. Steel's report here. One of the better reports in recent history for U.S. Steel. Very happy for this company. Their revenue came in at $5 versus the expectation of 4.6. That resulted in an absolutely whopping 140% yearly increase in revenue numbers. U.S. Steel comes out, they beat, and then do some good things from a price action. Don't provide guidance. Looking at a potential breakout here. A lot of chop on U.S. Steel. To me, and you guys can agree or disagree, to me, this just gives me more confidence in the other still plays.
Correct. That's for me as well.
Yep.
Yeah.
Yeah.
Seeing the strength in a
I look at
company
that.
like this confirms my CLF, kind of analysis and where my head's at. With
Yeah,
it.
whether your bias is towards CLF and the breakout of 24 or Nucor, and with Nucor's been a darling of tackle for a long time. Obviously, Still Dynamics as well, STLD here. That gives you a little bit of more confidence in a little bit of a high base as you come into that breakout. So, U.S. Steel is certainly not our favorite of the steel companies, but again, very positive numbers coming out of U.S. Steel, and does give a little bit of more evidence and more confidence going into the basic material plays, and specifically some of those other steel plays as well. Let's move on, unless you guys have something to say on U.S. Steel here.
No,
sir.
healthy industry right now. Yep.
Let's move on to something that is perplexing me a little bit here today. I don't see a lot of negative handles show this type of bullish momentum, but here we go with Team. Team reports negative 85 cents against 18 cents expectation. The 24 cents is some creative financing there. 559 million against the 524 million expectation. That resulted in a 30% yearly increase in revenue. The raw numbers is not the story here on Team. The raw numbers does not tell what is happening here. They increased guidance, whereas you saw a couple big time reports over the last couple of days lower guidance. You saw Team come out, increase guidance. So you have an increase in guidance, mixed data on their EPS and revenue numbers, increasing guidance. And I believe Coach Tim, they are also transitioning. They said one of the key phrases,
Cloud-based storage. And
that's all you need to
profits around
say.
The cloud. Yeah.
Listen, Tackle Trading uses Dropbox. We are a cloud-based company.
We also use AWS.
Isn't that-
we're
is
a
it-
dynamic cloud-based company. Yeah,
we have a partnership with Amazon.
That's basically what GameStop announced
we have
earlier
a
the year with
partnership with
Microsoft.
Amazon.
So why not? Yeah.
Oh, wait, we're not done. We have Slack too. Okay, I'm done. I'm done.
All right.
That's
Teams.
all I'm though.
This is a complete stay away from a candle perspective at this point, Frankie. A gap out with that high tail. There's nothing there, but an interesting response.
For sure.
What do we got next here, Matty? Deck.
The company I do want to talk a little bit about is Decker Outdoors here. Quietly, Decker's been doing some really interesting and consistent things. Here's what I like about Decker. Very consistent on the price action. Frankie, I used to trade Decker so much.
Yeah.
And then all of a sudden 3 years goes by and I'm like, wait a second. What's
Right.
Decker been doing?
Yeah. Where have you been?
This
Decker?
is what Decker's been doing. Okay. I like it.
I like it.
Decker got on my radar very quickly here this morning. Decker comes out and just absolutely destroys their expectation. They were expected to come in at a negative 4 cents, guys. They posted a 171 handle, just absolutely amazing. The revenue number came in very healthy at 504 million versus the expectation of 400 million. They weren't done. That resulted in a 78.2% yearly increase in revenue. They're still not done. They also triple whammied, hat tricked this. They increased the guidance. Love the price response as well. The reason I love the price response, we didn't actually break out, Frankie. Positive earnings, positive momentum, have not broken out yet. What's your read here technically on Decker?
Big fan, and definitely one I wanted to bring up to talk about here a little bit later. So we'll just talk about it really quick right now. I mean, you broke out, right? And that was last week. We basically consolidated. So take away the whole earnings story for a minute. We broke out and we've consolidated. That makes sense. We've seen the market do it. Makes perfect sense. Add on top of that the fact that we now have the earnings 3 months away, and we know that the report came in pretty nice. I think you have to really, really like this as a potential breakout candidate from a shorter swing trader's perspective. Heck, you might like it from a longer term perspective too, looking at that chart. But I do think you like this as a little bit of a consolidation breakout. Need to take out the highs of the last couple of weeks. But like I said, it was nice of it not to do it today. That opens up the door for a potential break next week. I really like it. I think we're going to have really good risk to reward. It's very, very easy to build the trade, right? Very clean entry. very clean couple of stop loss options, whether today's low, the low of this past 2 weeks, catching the 20, a lot of options for a stop loss. I think this definitely belongs on a breakout watch list.
And it could take a couple days where the volatility subsides a little bit, and a lot of it will be market dependent coming into next week as well. But I do think that is specifically the 415 price level. When you look at that on an hourly chart here, you see that 415 price handle right there, that wick right there. I'm not really concerned about that 419. It happened at the very, very beginning, like the first tick of the market today. You're really looking at that 415 level. As you can see, you see that tick right before the market open right there? That's where it really is. Mm-hmm. That 415 handle. So I do think that it's volatile a little bit, but again, you get that with Decker. I do like that high base potential breakout, though.
For sure. Big fan.
Really decent earnings report coming out of Decker. Let's move on, though. Let's talk a little bit about the energy space, and let's go on to two juggernauts here in ExxonMobil and Chevron. Two heavyweights in the energy space, no doubt about that. ExxonMobil comes in today at a 110 versus 102 handle, so a nice beat on EPS numbers. Revenue came in at 67.7 versus the expectation of 64.2 billion. Revenue, that increased 107% year over year. I honestly don't think you could have asked for more out of ExxonMobil here. They have a beat. Revenue numbers look fine. EPS numbers look fine. Year over year revenue coming from where they were a year ago, completely shut down. Obviously, there's context to the 107% yearly increase in revenue. But again, from an actual fundamental earnings perspective, I don't think you could have asked for much more out of ExxonMobil. Frank, technically a little bit challenging environment, some of it market driven here in the energy space. I want to go to Frank first from a technical perspective on both Exxon and CVX here, Chevron, both of them doing fairly similar things. So let me give my Chevron just raw numbers. Then I want to go to Frank technically, have Mark for some degree of analysis as well. Chevron comes in similar to Exxon, $1.71 versus the expectation of 150 or of $1.54. Revenue came in again, similar beat to Exxon, came in at 37.6 billion versus 34.9. Unlike Exxon's 107% yearly increase in revenue, Chevron comes in at 178% increase in revenue. Again, the reason I'm bringing both of these two up is they're both the two big dogs in that space. They had very similar earnings reports, and they have very similar technical price responses. So let me go to Coach Frank first. Let's talk about the technical responses to Exxon and Chevron very quickly. What's your read?
Well, right now you've got to navigate this potential bear retracement, right? If we're thinking about it from a bullish point of view, I think you actually like what we've seen if you've been thinking about this from a buyer's perspective, because we needed to see this bearish retracement get played out, right? We need to basically see it fail. So we needed to establish a high, and we needed to start pushing down. And that's exactly what we've been able to do. Now, the real kicker here is it might just be a bear retracement, right? And so, I think you could make that argument. So what we really want to watch for, in my mind, at least, is let's see if in the very near future, we settle in, create a higher low, and then take out what would now be yesterday's high, that little doji ahead of the earnings, at least on Exxon's chart. That's kind of what we're going to need to see for at least the steps for the bulls, right? The steps for the bulls. It's very similar on XLE, and there are lots of energy companies reporting next week, so maybe it needs to take a little bit of time. But I think right now you're either A, playing the bear retracement, or B, letting the bear retracement play out and watching for it to fail and using that failure in the form of breaking yesterday's high, at least again on ExxonMobil. Chevron's chart's a little trickier, I think, personally. But if we see that, whether that's enough to make you want to take a trade or not, that's your business. But I do think that could be interpreted as a bullish signal if we get this higher low, take out that pivot or that potential pivot point. Obviously, it's to be determined, right? But I think that's what we're going to need to see on this chart. So I think it's really either you're bearish or you're waiting to see these bears fail.
Well, and honestly, I think you're waiting for the bears to fail. Here is the better.
I think so too. I think that's the
one.
I'd feel more comfortable with that.
Don't get me wrong, Frankie. I see the short-term bearish retracement here, but how many times have we seen this scenario where it literally gets gobbled up at an intraday support, not even a daily support,
Right.
just an intraday support level, and especially in the face of some really healthy fundamental numbers coming out of CVX and Exxon today. I mean, the biggest question over the last year was, are these companies going to be able to be profitable, reassert their dividend and their stock buyback programs? You know, they've done great things over the last 6 months. The average price of oil has obviously helped these companies from a fundamental perspective. Again, I don't think you could have asked for much more from a fundamental raw numbers perspective coming out of earnings. And you're fighting up against some themes in energy. Energy down today, crude oil fighting up against that 74, 75 handle. There's just some mixed data happening in the energy space where you don't have a lot of confidence to really kind of push those chips in. But again, I would not be looking at the short here. I would be looking at the shorts to fill.
Agreed. That would be the pattern that I wanted to see. I mean, I wouldn't want to buy it today. If you made me trade,
if you
made me trade it today, I would go with the bears, but I would be watching for that bear stop out trade. And hopefully that takes, a week plus, because for me at least, with that bear stop out trade, which I think is one of the best, trades out there, it's always better when it takes a little time to develop and we actually see the interaction between the 9 and the 20 get back on the right track, at least from a bullish perspective.
I agree. Mark, what about you? You track the energy space quite a bit. Obviously, you're an investor in the space as well. Exxon, Chevron both report earnings here today, both very positive on their actual fundamental numbers, in my opinion. What's your read following the two juggernaut earnings reports?
They were great. Listen, Chevron reinstated their buyback program today. I mean, that should, tell you all you need to know. But if you dive deeper into it, Exxon reduced their debt $2.7 billion. They are making a ton of money on their chemical business, all of their different segments, because these things are involved in every aspect of the oil production process, upstream, downstream, midstream, everything. Everything looks healthy across the line, particular emphasis on chemical products, which they're seeing very high prices, being able to take advantage of that. Big picture, dividends look healthy, starting buyback programs. The day-to-day technicals, things can go in all kinds of directions. You're seeing this type of chart formation where you came down, rally, now looking in bearish retracement. I mean, you're seeing this in a lot of areas. You're seeing this in Delta Airlines. You're seeing this in a lot of COVID-sensitive areas. You're seeing almost the exact same chart. Fundamentals are fundamentals. These are good. They're improving every quarter, and most importantly, they're solidifying every quarter. So until Putin unleashes the beast and unleashes oil production,
he hasn't told us that yet.
Then I think there's opportunities. And
Did
bears
he call
conformance, he did not.
He didn't call you? He hasn't called me yet either.
No, he did not. And bears can lose in a lot of fashion, right? They can lose on momentum upwards. They can also come down to support levels, try to push it down, lose there. But looking for that technical signal, it's a go for me on Exxon. It just can come in a lot of different shapes. I'm carefully monitoring. I think there's opportunity here in both companies.
And when you talk about I do agree with Frankie on the short-term analysis. It's a bear retracement where the projection.
Not pulling a trigger today.
Well, yeah, where the projection has to be to come retest these support levels at 55. But again, I've seen a lot of times where intraday analysis, it gets stuck on a dime here, rotates and have bear stop out day. I think at this point, you're looking at cash flow strategies until you see that bear stop out breakout of resistance. Yeah. All right, let's move on. Last earnings report I do want to quickly just talk about is Caterpillar. As Caterpillar fights this 200-day moving average, coincides technically a little bit with a $200 support level. Caterpillar comes out today, reports 268. 256 versus the expectation of 238. Revenue came in slightly above the expectation, 12.9 billion versus the expectation of 12.6. That resulted in a revenue increase of 28.9% year over year. Did not dive into the details of the earnings, so don't know what the context of the earnings call was. Raw numbers were boring, and I guess from a raw numbers perspective, I'm not surprised that we're seeing a test of the 200 with a little bit of gap down here today.
Do you guys have interest here in CAT at the 200 period moving average from a
not as a
trader,
as
an investor once it develops? Frankie, is that where your head's at? It needs a lot of time here.
Yeah, for a trade. Yeah, I mean, let's see if that floor that zone can hold, ultimately take out some resistance. Again, flip flop those moving averages. I mean, I understand the idea of wanting to bet on that support zone holding. I think that's a decent bet in and of itself, but there's no signals yet, and they will take time to develop if we get them.
Yeah.
Gotcha. I could see, long-term investors, they're writing covered calls right now.
Yep.
Is what they're doing on Caterpillar, and they're looking at that 200 handle, and they're saying, long-term investors aren't going to get out even if it breaks 200. They're not even tracking it.
Mhm.
What they're doing is they're just going to say under 200, I'm going to cover the trade. I'm going to cover the investment. I'm going to write a covered call at the money. I'm going to buy it out of the money put option to collar it up. They're just looking at that 200 level saying, okay, under 200, yeah, it can get a little ugly. Let's make sure we insure and control the position. Short-term traders, they're not going to do anything until they start seeing patterns develop.
Mm-hmm. Yeah, that's fair. All right. Thanks for the earnings roundup, Matt. I know it was a busy week of earnings. We'll have another one next week as well. Just give you a heads
Yay.
up. Look forward to
And
that.
just because I told Frankie, JCI technically looks like a potential breakout following earnings as well.
Yeah, exactly. Yeah, I was wondering.
Frank's going to get it on Frank's charts.
Well, yeah. Hey, let's not mess around. Let's start with Johnson Controls.
Yeah, that's right.
What caught my eye when I asked Matt in the pre-production if he had the
So
numbers
have we
on there.
officially started Frank's charts?
We've
This is
officially
Frank's
started
charts.
it. Yeah.
Is it on Frank's charts? I want theme music.
Well, you could sing theme music. You got
I don't
something
want
dialed
that.
up for us here. I mean, you can just hum me a tune right now.
That would require 5 seconds of coherent, logical thought thinking before what I just said. So
All right, all right.
I'll pass this week.
Maybe next time. What caught my eye? I mean, obviously the break yesterday, then we had earnings today to mess with it, right? But the response, I mean, we gapped down on the open, and I mean, we've really fired back. So I mean, overall, the trend's really strong on Johnson, right? You don't need me to explain that to you by any means. It's been very strong. The response today, very telling, right? I mean, it gapped down, and it could have, been a different looking candle for sure, firing back right into that old resistance level. I'm looking at this just taking out. I think at this point in time, we're close enough that we take out yesterday's high for confirmation and look to see if we can continue to roll this trend on Johnson Controls. I mean, they've been good to traders. They've been a pretty good trend trading stock as of late. Great response off of the earnings.
Gosh.
You can sign me up. What about you, Tim? Can I sign you up is the question.
It looks like obviously it's a wonderful trend-based trading situation here, and it looks like it's got a nice little trigger. I do like the note that you put in there. It grabbed my attention when you're talking about the candle. And Matt, can you go down? Weekly is beautiful. Long-term trend is 100% intact. That's been a juggernaut. Firing back off of the intraday level into a nice little high base breakout. I don't think anybody could potentially veto this here. So I do like the setup. I like the trigger.
I don't know if I love it from a swing trade.
It might just be a
I
position
think I
trade.
love it from a position trade.
Yeah.
I like it from a swing trade. I love it as long as it hugs that 9 EMA on the weekly chart.
Sure.
Man, that is
So just try to trend trade it, right?
Yeah,
that weird marriage.
Well, I like a swing trade setup going into it, but then the management of it on the weekly chart.
Yes, I
Sure.
agree with that.
Yeah.
I like that idea.
Yeah, well, it's been a good just ride the nine.
Triggering
Right?
techniques from a swing trade, management from a position. That's what you're saying, Matt?
That's on JCI. Yes, that would be my analysis on JCI.
Yeah, I think that makes sense. I am always a big fan of the response that we saw on JCI when the stock gaps down on earnings and immediately it's just like, well, that was dumb. Bye. It always catches my attention, whether it's for this next trade or not. Maybe I can't get the risk to reward to work, or maybe it's too much of a position trade and I'm looking for a swing trade. It's going to keep these guys on my radar probably for quite some time.
Well, and again, gap down in an earnings report, when you've done as many as I have, there's key moments in the earnings report that give you a little bit of telltales. The gap down happened on the numbers. The numbers were lukewarm at best. Expectation was 83 cents. It came in at 83 cents. Revenue came in very similar. Following the conference call, they upgraded their guidance. That gave a little bit of ump coming into the price action today. And so what you really saw, the gap down and then the recovery was based on the gap down on the numbers being lukewarm. Guidance came in as an increase in guidance. Now you're threatening that continuation breakout. I think the price response is very positive here, coming into a potential breakout.
I like
Sure.
it. What do we got next?
All right. I brought these up 2 weeks ago. We couldn't do much because of earnings, and that's Thermo Fisher, TMO. These guys were lining up absolutely beautifully technically, but they're getting awful close to earnings. And I just mentioned, keep them on your radar. Let's see what they look like after earnings. Well, this is what they look like after earnings. Long range consolidation, Mark. I know that's, we all like it, but I think Mark really, really likes it. Breaking out of that range on the back. I don't know if you had a chance to, I think they were yesterday or Wednesday night or something like that.
I didn't cover them. It wasn't today, but
it wasn't today.
Yeah.
It was, I think it was Wednesday night.
It's like Wednesday night. I think it was Wednesday night.
So love the price action that we've seen here. Love that breakout. I am a big fan of this. And again, this is going to be one that could both be a trade now and a trade as we're going into the upcoming quarter. I probably mentioned it before, but I'll say it one more time. Whenever I go into a long range, I mean, we've been in this range since November, right? I mean, this is a very long, consistent range that we've been in. Whenever we're in that range and we've got a very clear established of what it is, that is my expected move, not necessarily on one swing, right? But that is my expected move. I mean, these are all-time highs on TMO here, which puts that in the 620 to 625 range. From where I expect this to eventually go. How to get there? Well, hopefully a straight line up, but probably not realistically a straight line up. A very nice window to work with, very clean breakout, a whole quarter ahead of us. Regardless of what the numbers were, I know what the response was, and that's what I care about the most from a trader's point of view. So nothing too fancy here, just a very pretty long-term consolidation pattern getting broken out of post-earnings here today.
What are you going to do with this here? Are you going to bar it up there after it's already broke out? Do you still see some deeper stop loss placement?
I think if I were building,
what's specifically the question though? Because that's a very open-winded question.
You make reward to risk work here?
Yeah, 100%. You have multiple
100%.
time frame. You're on the one day of a breakout with multiple time frame analysis.
Yeah,
in fact, I think not only can you make it work.
This is 31 flavors, guys. What are we talking about?
Yeah,
this is a juicy.
How do you want to play it? Do you want to play it with cash flow? Do you want to play it with direction? Do you want to play it
I actually went to the options chain immediately because I might not buy shares, price of the shares. I was looking at different option techniques available to me. So this is a juicy opportunity.
Personally, because of the strength of the long-term weekly chart and the weekly breakouts having a very successful high breakout rate, I like a position trade here.
Gotcha.
I would like probably the most, if I'm building a trade right this very second, is stop below the low from the 28th, 3 days ago, target at 625, being willing to sit through some retracement. So treating it more like a position trade than a swing trade. You could try to swing trade it though. I mean, we are in probably, I don't think it's, I think the strongest sector in the market right now is healthcare. I think objectively speaking. Yeah. So I think 31 flavors is a good way to put it. There's a lot of ways that we could roll with these, just depending on if you believed in that window, how much of it you wanted to try to catch in one setting. Are you cool sitting through a retracement? I think it would just be up to how you like to trade.
I agree, but with so many swing trading candidates in the market, when you're talking about an eighth month type breakout on a weekly chart, I think you got to be thinking a little bit longer term here.
Oh, I
got to match
agree.
your strategy and your time frame to the quality of the chart.
Yeah, for me, I think you're trying to get to that 620. That's what a 620 to 625 range.
Any target that is like that, especially for somebody like you, Frank, who, like, once you said 620, he's thinking longer term because you're one of the most conservative targeters I know, on swing trades. Like I'm constantly being like, Frank, like, don't you think we can get here?
I mean, and I know it's like monthly candle. I just looked at the monthly chart. It is so beautiful. I'm going to spend some time this weekend because it's been a long time since I've looked at Thermo Fisher from a fundamental perspective. I'm going to break it down. But the smoothness, I mean, it's just.
Did you just promise a stock spotlight for us?
Yeah, I do. I'm gonna dive in.
Like
I mean, I know what this company does, and I know they didn't lose as many social media users as Pinterest this quarter. But there's a lot more that I got to dive into.
they did not do
I
that.
got, you know, and so I'm going to dive
That
into
was
this
funny.
one because the technical opportunity there, I don't have the fundamental conviction because I just been too long. I'm going to dive into this one hard, because I like that chart setup.
I don't look at a lot of monthly charts, but that monthly chart does look good. Like,
Yeah,
You know,
this was, believe me, this one, you know,
Yeah.
I've been watching it for a while and I've been looking at that earnings date. I'm like, don't do what team did. Because then I've got, I mean, the window is always 620 of the breakout. I'm consistent in how I approach these consolidation breakouts. I always go after the sideways move. But if it gaps up to 600, I can't trade it immediately. You know, it's a whole different thing. So yeah, I've been, you know, hoping for this type of response to get this technically set up somewhat like this. So I thought you would like this one, Mark. It's hard not to like that from a purely technical
from
point
lots
of view.
of perspectives, right? Yeah.
Yeah, probably my favorite of the bunch. But I think Matt's right. I think in windows, and so that's where my window is at 620. That's what I'm looking to fill up. Am I going to try to trade within that window, or am I just going to try to build a trade to just deal with, you know, some pullbacks here and there to try to fill up that space? And I think on a stock like this, I don't want to miss. I mean, you don't get a lot of opportunities coming out of those long sideways ranges like that, you know. So I would like to try to take advantage of it if I could.
You know, I typically say this on some of these candidates that are long range. Yeah, you never know if it's going to work because you can't.
Sure, you don't know.
You don't know the future, but you got to hit them.
Exactly.
You got to hit them. You know, even in the face of down and fear, you got to hit them, because these long-term consolidation breakouts, yeah, sometimes they gap down and fake us out, but they have that potential in them.
Yeah.
No, and I'm looking at long-term volatility chains. And once again, I'll have a lot more on this next week. Volatility is low, you know, mid-20s. You know, that's usually very constructive for option strategies, you know, delta-based option strategies. So.
Yeah, gotcha. All right. Any other ones, Frankie?
Oh, well, yeah. See, I knew that's why I got that one in there really quick, because I knew Tim was just going to start. I know Tim. It's you know your Tim day.
Tim's looking at his Google. Tim's looking at his Google Calendar right now, and he's saying, "I have a meeting right now. Here."
Tim was saying we're going to get done on time today, and I laughed at him. I laughed in his virtual face because he tells me that every week, and we never ever do it.
Yeah.
So,
all right, give me a good one. Give me.
Well, nothing's going to follow up.
As
TMO.
opposed to the last one.
All good ones.
Give me a good one.
TMO.
Tim, I'll give you a good one. I'll let me help you out, Frank. I'll give you a good one. I
appreciate it.
Let's go ahead and look at TMO's monthly chart again.
There you go, Tim. Can I sign you up for TMO on the monthly?
Tim, are you just excited to go start watching Gladiator?
As a matter of fact,
hold.
No, as a matter of fact, I've got to take my daughters to a play date here in a few minutes.
If you have to know,
if you must know, but
wait a second. I'm calling BS.
No, it's not. That's true. My wife has gone to a conference for the day with her mom, and Dad's
definitely
in charge.
calling BS now.
All right. Call my wife.
There you go. I'll tell you what. I'll rapid fire a couple, Tim, and I'll let you give commentary so you can keep the pace. Does that sound fair?
Oh, sounds good.
All right. ROL, Rollins Inc.
Oh, little Rollins.
Break out of a big old
rolling with
W.
Rollins.
Earnings behind us. Not a lot of resistance until we get into that approximately 42 range. Just need to take out the high of this week and a little breakout play.
There's several things grab my attention here. Number one, the reset off that little pivot before we broke out. If we were just running into it, I've heard Matt talk about this enough that, just that very, very big run into a resistance and then a break is different. I see that little 4 consolidation pullback, the retracement, as a reset of that. Now we're firing off. You could have played it yesterday, right, Frankie?
Yep, absolutely.
Could have played it yesterday, but now you can also kind of confirm that on today. And that long-term W pattern is absolutely a standout from that pattern perspective. I like this a lot, actually, Frank.
Awesome. Maddie, I'm going to give you the 12 seconds.
Frankie, I kind of feel like I'm your hype man standing behind you in old
and I do
school,
appreciate that.
You're Snoop Dogg, and I'm like, let's go, right? You look at Rollins here, rolling with Rollins. Tim, you nailed it here. You got to like the fact that you reset the trigger going into a potential breakout against a resistance level that is very, very important right there at the 38 handle. So you're looking at a scenario where you're completely overextended. You come back, you retrace into a cluster of moving averages led by the momentum of the 20 and the power of the 200-day moving average. You come into earnings. Earnings response was positive. It resets that trigger going into it. You got to like it from a multiple time frame perspective. You got a little chop at 40 and a half. And so I do like a target at 40 by 42 here. I like it from a multiple time frame perspective. I think swing trades or position trades make sense here.
Sweet.
Awesome. And see, Matt's my hype man, so I gave him 12
I
seconds.
am your hype man.
He took more, and I'll allow it. I'll allow it. Okay, a couple more here, Tim. Snow, SNOW.
There we go.
Playing defense all week.
Company in a little bit. Yeah.
Yeah, they've shown some reversals, right? They worked into resistance last week. Been watching them for a breakout. Didn't occur this week unless maybe you were super, super, super aggressive, like by a penny. Probably not on a stock of this price. But we've held that. We've kind of breached briefly, but we've kind of rallied back up. So we've basically been holding the moving averages. We're getting that rising 9 coming with us right now. So I'm looking to see if we can get that rising 9 to kind of give us that oomph through these characters.
All right, I got all you need.
You can't see it, but I'm back here. I got my cups up. I'm dancing. I'm celebrating. I'm saying Frank, I like the breakout here of 275. Targeting very simple in my opinion. You're looking left of the chart. You got dings at 300, significant whole number. Makes a lot of sense for T1 at 300. Makes a lot of sense for 325 on target number 2 in my opinion. So when you're looking at this from a consistency perspective, number one, you got 2 wicks that coincide right there at 275. You cannot discount that. So when you're looking at it on an hourly chart here, you see the wicks here. Those dinging right there at 275. 275 sees the trigger above 275. Fairly simple here on Snow. Stop loss placement, you got a lot of different options here. I like the 265 handle, but I certainly can see some people looking at 255. Personally, I do like the 265 support handle intraday. Like a trigger above 275, target 1. Old pivot point right there, significant hold number 300. Double top, triple top action over here at 325. Looking left of the chart, you got to like it above 275. Stop loss under 265. Target 1, 300. Target 2, 325. Looks pretty solid, bro.
Good day for a cloud data company.
I had good analysis. Then you threw cloud.
Throw the cloud out there as well. And I do love the technical analysis.
Tackle Trading is now a cloud-based company that also deals in CBD and marijuana products.
Oh, really? So we're just selling everything.
Wait, I'm not done. We also take the profit from the selling of the marijuana to invest in Bitcoin to help the environment.
Bitcoin ledgers, but we're doing it environmentally friendly. All right.
Yes, we are.
Can we also be a Can we be a Palantir company when we figure out what they actually do as a business model?
You're fired for even bringing up Palantir and Tackle Trading.
Can we do that too? You brought up pot!
Listen, I just threw out all the themes that people just randomly say to get price appreciation. That's all.
Yeah. Cloud. All right, Frank, you want maybe one last one? These are all good, by the way. I love that chart setup.
Yep. I know you got to go. So I'll just briefly bring up Honeywell, HON. Much like our friends, not as pretty as TMO, but have been in a little bit of a sideways range, hanging out, consolidating up top. Really spending some time thinking about, do we want to break out? Yeah. Probably need to see XLI. Yeah, the Dow XLI breaking out would be helpful, probably, but just another little breakout candidate.
Yes. For me.
Listen, it's going to stay on the radar and it's going to stay on the scatter report until it breaks out.
Yep. I love everything about this one, Frankie.
Or until support is broken.
Right after earnings too. We're coming off an earnings report, so that's in the rearview mirror. We fired into resistance here. We've been hanging out. We've been digesting some of this price, long-term consolidation on this breakout, and it's in the industrial sector, which
doesn't this one feel simple?
Very much.
It feels very simple.
Yeah,
it's like you break out of your range on the Dow. Honeywell breaks out, and you ride the lightning.
Yeah, I think so. Love it.
Yeah.
Some good finds there, Frankie. Thank you as always.
Thank you,
Thank you for
Frankie.
letting me share.
Much
Always like to share with
appreciated.
And
friends.
thank you for letting me be your hype man today. I like that.
And
I'm
you
gonna
did a
play
good
that
job.
role every
Thank
week.
you for him actually letting him share some charts today. You know.
See, what happens is, Marky, I gotta like, even if I know there's 5 more, I gotta start like dropping seeds in there. I'll be like, all right, Frank, here we go.
Frank knows
We-
your seeds.
Wait a second.
We love everybody knows my tricks, so it's very
Tim-
transparent. So,
Tim's not wrong. We would have went another hour.
We
you
would
know,
have.
all right. It's kind of like every concert you've ever been to. There's always an encore, right? It's just built into the expectation. Guys, we're done for today. Let's wrap up with a couple things. Marquee programming notes. I know you've got your at
My
the
final
bell.
thoughts is the Guns N' Roses concerts I went to 20 years ago did not have an encore because Axl Rose was mad at the concert goers, had some very unkind things to say. So there's not always an encore, Tim.
Axel did some questionable things.
But there is an encore Friday night, Mind of a Trader at the closing bell where we go over the markets. Basically a lounge where we can all chill out, decompress, talk about any last minute trade management decisions. We'll do that in an hour, 10 minutes. I'm going to talk about rankings at the start of the broad market because Gino's still on vacation. I'm going to do the newsletter again this weekend. Missed my commodity report, but we'll have Greg. We got a full. Frankie's even going to do a report this weekend. So look forward to Frank's very thorough, detailed, great reports on that. So that is what we have to close out the week and to close out the month. August begins on this weekend.
My daughter is now asking me adorable questions about when we are done so that she can go to her friend's house. Little sweet Maddie's got an art friend. They're going to go and draw some pictures and paintings and all kinds of stuff, play all kinds of different things. Frankie, final thoughts from you, sir.
Just one more big week of earnings. Make sure you're staying on top of it, right? Follow along. You know the drill. And then we really will be just about done. But other than that, let the charts do the talking. As always, trade smart.
Yeah. Matt, final thoughts for the team out there.
Fridays are, this is the moment of time where I get my favorite 3 hours of the week. And that's the scatter report meeting where all the coaches of tackle trading come together and, discuss the sectors, the markets, the commodities, the currencies. We rank everything from a scoreboard perspective, and we start going through the entire marketplace to highlight those technical darlings that are going to go into our watch list candidates called the stock report and the options report. So getting excited for that. And for Team Tackle out there, for the pro members, make sure you do your weekly routine, review the newsletter, review those rankings, watch Coach Mark in the video that he puts in there in the newsletter. Very, very helpful there. And then obviously, go through the stock and options report. We'll be with you on Monday to break it all down.
Love it. All right, guys, if you're out there and you're still watching the show, appreciate you as always. If you've not done it yet, click that subscribe button, click the bell. That way, when we do go live, you get alerted right through your Google account, through YouTube, and you can come and join us each and every time we start these half